I'm Charlotte McLeod with investingnews.com, and here today with me is Haytham Hodaly, president of Wheaton Precious Metals. Thank you so much for being here. Great to have you.
Thank you, Charlotte. I appreciate you inviting me.
Of course, I think it's going to be a great conversation on pretty much a perfect day to be talking about precious metals. Before we jump into everything that's going on there, I wondered, just because it's our first time speaking, if you could share a brief introduction to yourself and your background in the sector.
Sure, happy to do that, Charlotte. I've been in this industry now for more than 30 years. My background, I'm a mining engineer. I did a master's in mineral economics. I spent about almost 17 years working alongside in the North American securities industry, and working for the last company I was at was RBC before that, and before that it was a small boutique called Salmon. About 14 years ago, I joined Wheaton as Senior Vice President of Corporate Development, and have in the last 13, 14 years managed to deploy over $11 billion in capital in the streaming industry, along with my team, who's obviously done a phenomenal job.
Of course. Well, impressive background. Thank you for sharing. And let's get right into what's happening with the precious metals. Sure. I thought we could start with gold. It's been a record-setting week, month, year, essentially, for gold. We got past 4,000 per ounce for the first time this week. And I know there's so many factors at play driving the metal, but what would you place at the top of the list there?
Well, with all the continued geopolitical tensions and central bank buying and, just the global uncertainty, I guess, with regards to trade wars, et cetera, the market and investors are flocking to a safe haven commodity. That safe haven commodity is gold and often silver as well. We've got central banks buying. We've got rate cut expectations over the next little while, the continued geopolitical uncertainty I mentioned, but also ETF inflows, which we've seen, consistent inflows into gold-backed ETFs specifically.
Yeah, it's definitely hard to pull out just one thing. It's a confluence all coming together, I think, to drive gold. And, with the price at these levels, I'm seeing a lot of optimism among investors, like you're saying. But I think people are also looking at it and wondering, okay, how high can gold go? Does it need to take a breather at this point? What are your thoughts on that?
Well, I mean, if you look at the outlook for the US dollar, and obviously the US dollar is a critical component to what happens to gold, because gold is denominated in US dollars. So the weaker the US dollar, the stronger the commodity price. And what we're expecting to see over the next, I would say, probably the next 12 to 24 months is continued devaluation of the US dollar, which means gold should continue to be stronger going forward.
Makes a lot of sense. And I want to bring up silver as well, because very historic day for silver. We saw it get past the $50 per ounce mark there. And when I'm looking at silver, what I'm asking everybody right now is, how much does silver's move have to do with following gold higher, and how much is to do with maybe silver specific factors? How do you see it?
Well, silver typically has a higher beta than gold, primarily due to its roles both as a precious metals and as an industrial commodity. So, what that means is it reacts more volatility on the up to when you're on the gold price is going higher, and it also reacts with more volatility when the gold price is going down. Over half of silver demand is industrial, with the solar panel production and leading the way. I'd say that's a big part of it. I think if it is the affordable metal, given where the gold is right now, silver is definitely the affordable metal. So it is acting as a safe haven asset for a lot of investors that were a little bit late to the gold market.
I think that's definitely starting to come through. And on the note of silver, this $50 level has been kind of a psychological milestone. And of course, gold is at all-time highs as well. But for silver, I wanted to ask if you had anything you would share on getting to this level and comparisons to the last time, because we've only been here a couple of times before, and those times were quite different.
Yeah, I think the last couple of times we've seen silver at these levels, it was a silver short squeeze, effectively. What we're seeing now is actual safe haven investment demand and just a general flock to precious metals, and gold and silver, that is, but specifically silver right now, as a metal that's an affordable metal for investors to jump into the precious metal space. I think going forward, what we would probably see is continue to strengthen the gold price, which would mean continue to strengthen the silver price. And if you look at the historical gold to silver ratio, you would see that the silver price, in order to get back to that historical multiple, should probably rise faster than gold going forward.
Yeah, I find the ratio very helpful in looking at where we could be going. And so you're mentioning investors are flocking into precious metals, gold and silver, and it ties into something I wanted to ask you about the company. So what kinds of conversations are you having with investors? Can you talk maybe about the level of new entrants to the space that you're seeing at this point?
Sure, and that's a very good point, because historically it's been resource funds that have been investing in companies like Wheaton and the mining industry in general. What we are seeing is generalist investors who feel like they've started to miss out on this move in the commodity price, on specifically gold and silver, look to safe haven investments. And the best way for them to do that is to invest in the lowest cost, highest quality asset with the most organic growth and the most leverage to movements in the commodity price. That's where Wheaton comes in. We're positioning ourselves as the investment of choice in the mining industry. So if somebody's coming in and they've missed this run, and they want the lowest risk way to do it, that's Wheaton Precious Metals is definitely the one.
Right. And I think that goes in another direction that I'm seeing some questions about among our audience, which is, is it too late? Have people missed this? Is there still time to get in?
Oh, absolutely not. I think going forward, precious metals, like I'm looking at the gold quote as we speak, we're over $4,000. And we are expecting this could go much higher, at least 10 to 20% higher in the near term. Nothing has changed with the demand outlook for gold and the weakness, projected weakness of the US dollar. And that's what's going to drive the commodity price higher. And silver will tag along with gold, as we indicated earlier. It does react to more volatility. So the key is for us as mining companies and as investors is to find the best assets that offer you the most leverage. And because a significant portion of our production that we get is fixed ounce basis, we have more leverage than most other companies in the mining space.
Well, and let's talk about some of Wheaton's recent news. I think last month at this point, the company committed financing to Carcetti Capital, and this is for its acquisition of Barrick's Hemlo gold mine. So this transaction is a little bit unique and interesting. I'm wondering what you would pull out for people to understand there.
Sure, and this is the first time, Wheaton has actually participated in an acquisition opportunity where a stream was used to acquire an asset. And it demonstrates the strategic flexibility of our model, really. And when we looked at Hemlo, which is what Carcetti was buying, and which will be renamed, I believe, Hemlo Mining Corporation shortly. It's been a brownfields operation that's been operating for decades. I've been there several times historically myself. It's a long life, low cost Canadian gold mine with a strong operating history in a politically stable jurisdiction. And that's incredibly important to note. When we're looking at investments, we're looking at an ability to continue to expand these projects. And this was a project that was actually starved for capital by Barrick because it was a non-core asset. It was, it has seen its best days. But I think what the market is not understanding is that, when you look at what Barrick was calculating the reserves of this asset at versus what, which was 1,400 at the time, and you look at where we are in the commodity price right now, that's a reserve life that's going to be approaching 20 years based on half of where the commodity price is right now. So we're very excited about the outlook for this. And it's got a strong operating team in place and a strong management team to actually drive that growth.
I think that really helps elucidate what was going on there. And I'm not sure how much you can share about Wheaton's plans moving forward into 2025, 2026, but what are you looking at? Is there anything that you can talk about?
Sure. Well, our strategy is to continue to deploy capital in a disciplined approach. We look for creative transactions only. We're not looking to grow for the sake of scale. We've never tried to be the biggest company, although that has been the outcome, but we've always tried to be the best and most profitable company. And with that, you get size. We look at probably between 40 and 68 different opportunities a year as an organization. And if we do 2, 3, 4, that is a good year for us. So we're continuing down the path of looking for those high quality creative transactions that will continue to drive our growth going forward.
And we're pretty solidly right now in a precious metals bull market. Are there any ways that the company makes adjustments to what it's doing in this type of atmosphere?
Flexibility and creativity in this industry is what drives this industry, and relationships. So if you look at the last 5 years, 60% of the transactions we've completed have been with existing partners or people we've done business with and know that we're going to treat them fairly in the past. So that's, from our perspective, that's incredibly important. Now, what's also important, as I mentioned, creativity, is not every stream is structured the same. You can't just, take one contract and replace the name and move on. Everyone, and when we're actually putting in our overall bids to try and get these transactions, it's a very thoughtful approach that looks at the overall profile of the operation and tries to minimize the amount of impact that the stream will have on that, so that it's a win-win transaction going forward.
So Wheaton is looking carefully for new deals, and also in the broader gold precious metal space, there's companies that are doing M&A right now. I think we've seen quite a bit already in 2025. I'm wondering if I could get your take on what we're seeing there. Are you liking what you're seeing? Do you think we'll see more of these deals making sense to you?
On the streaming space specifically, we've seen growth for the sake of increasing scale, because some people tend to believe, or some companies tend to believe, that having that scale will bring you the valuation. That's not the case. What investors will pay for is high quality. They don't want unaccretive growth, and they don't want low quality assets. And that's incredibly important. We're also seeing in the mining space, outside of the streaming space, just in the general mining companies, we're seeing consolidation going on there. And that's because of, I would say, an inability to continue to explore, or not an inability, but the lack of exploration dollars that has gone into the ground over the last few years, in favor of instead looking at acquiring or partnering with some of these junior companies. So now we're seeing a lot of these companies have very stagnant growth and looking for ways to actually stimulate that growth, and that's where consolidation has come in for them. I don't necessarily believe it is the best outcome for these companies, but for some of these companies that don't have that growth, they don't really have much of a choice in this environment.
Well, and you mentioned, I think that's a big issue, the lack of exploration that we've seen. Do you think in this type of market that's something that can pick up, and maybe we get a little bit more of that?
Absolutely. And it's funny because last year, this time, when we meet with various companies at conferences, the majority of the juniors, for example, were sitting on, a few $1 million at best. And now, 1 year later, they're sitting on, I would say, somewhere between 10 to 20 million or more, which provides that capital required for exploration. So yeah, if you'd asked me the same question last year, I would have said, it makes a lot of sense for companies to continue to acquire these junior companies because you're acquiring them at a cheaper dollar per ounce. But now, with the uptick in their share prices as well as their solid balance sheet, you're going to see significantly more exploration dollars going into the ground. And that's what this mining industry needs.
Yeah, that would be great to start to see. And all right, so we've gone through, I think, quite a bit with gold and silver. If we tie this all together, where would you place us in the cycle right now for precious metals? I know you talked a little bit about that, but just to put it all together.
Sure, and we're still in the growth phase of the precious metals cycle. I think there's a lot of I would say companies that have a strong organic growth profile, not unlike ours. Like, for example, we have 40% organic growth the next 4 years on projects that are permanent and in construction alone. That's one of the best growth profiles. There's other companies in the space that are similarly doing that as well, but not to the same growth profile. I would say going forward, we're going to continue to see consolidation in the mining industry because of that lack of growth in some areas. And I think you're going to continue to see some consolidation in the streaming space because of I would say, the not as exciting growth profile as Wheaton has going forward.
Makes complete sense. And I will let you go, but before I do, any final thoughts that you would share on either Wheaton or the markets with investors right now?
Sure. Maybe I'll just make a couple comments. I'll say, Wheaton is by far should be the premium investment vehicle for any investors. It's high quality, long life, pure precious metals, has an organic growth profile that's unlike anybody else out there. It's low cost, low risk, with a focus on strong partnerships and ESG. And we've got 83% of our assets coming from assets that fall in the lowest half of the cost curve. We've got over 60 years of reserve and resource life. and a 40% organic growth profile without having to even lift a finger going forward. So, and that's a conservative profile without having to do additional transactions. Our industry, our company was built on accretive transactions, and that's something we're going to continue to focus on going forward.
Well, great overview. I hope to have you back soon so we can get some updates on what's going on, but great to have you. Thank you very much.
It's a pleasure meeting, and thank you for having me on your show.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Haytham Hodaly with Wheaton Precious Metals.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.